Welcome back. Continuing on example 1, we just left page 7 doing the entries to the capital fund, and now we're on page 8 doing part F. So part F, government grants for operating purposes. So right away we know we're talking general fund. Total $1,200 in year 6. $910 was received during the year, the balance in year 7. So, did it say it was restricted for any other year? No. So, no restrictions. So, can we recognize the revenue? Yes. So, this is in the general fund. We got revenue from the government grant of $1,200. Some of it was cash, and the rest was some kind of grant receivable. For fill in the blank, and it works out to $290. So you just subtract it. Okay. Part G, invoices totaling $1,866 were received on purchase orders originally recorded at an estimated cost of $1,870. So that would have been in your budget originally. Suppliers were paid $1,446 on account for these invoices. Balance owed is still outstanding. And here's how the costs were allocated. Notice they're going to break all their costs down into their different programs because you need that kind of information. When a potential donor comes and says, well, your shelter program, are you breaking even on that, or the food program? You want to know how the organization is working. So, is this endowment of capital or general? It's in the general fund. And basically, we're recording these expenses. So shelter, program expense, food, program expense, admin, program expense, or just admin, I guess we don't need the word program. And that was $650, $960, and $256. And we're going to credit cash for $1446 and credit AP for the rest. Fill in the blank, which is $420. Now we're going to pay the wages. So total wages, $357 was paid, $183 is payable at year end. So notice they've got some of adjusting entries kind of included in these. So wages are in general, and debit, shelter, program, wage expense. If you just put shelter program expense, that's good. The key thing is it's an expense account. Debit, food, program, wage expense, debit, admin, wage expense. And that's for the 90, the 150, and the 300. We're going to credit cash for $357, and $183 is our account. Actually, we probably should put wages payable to distinguish it. So, nice straightforward entries, just don't get them reversed. Okay, the United Way grant amounting to $65 was received in December. Now, what was the United Way grant for? It's for operations next year. So, is it restricted? Yes. So, it's going to go in the general account. Now notice this was one of those where we could have a restricted fund just for the United Way. And you'd probably do that if you were getting several donations from the United Way and they were restricted for different purposes. But this one, it doesn't need its own fund. So it goes in the general, and we got cash for $65,000. Now here's the question. It's restricted. So do I record revenue or do I defer it? I defer it. Because it's restricted. Record revenue when the restriction is lifted or when the expense is made. So you can think of it both ways. The minute in year 7 we pay some money for operations, then we can go ahead and record the revenue from this. Okay, moving on to part. This question kind of goes on and on. Okay, later in the year, a prominent supporter donated $50 to be held in endowment with the income earned to be unrestricted. So, the fund it's going to be in is the endowment fund. And we've got cash. Now, it's restricted, so do I put it in revenue or deferred revenue? Because it's going into its own fund, we don't need to worry about deferring it. We can just put it as revenue. So revenue, donation for 50. We don't need to defer as it is in a separate fund. So notice the United Way grant we did have to defer because it was in the general fund. It didn't have its own separate fund. But the endowment does, so it can just be revenue. Now, the investments in the endowment fund earned an interest of 40. Further 14 interest was returned from term deposits, and it's in that were in the general fund. So, this we said was unrestricted from up here. So, it's going to be in the general fund. So both of these things go in general. We're going to get some cash, and that's 40 plus 14, which is 54. And we're going to credit revenue. Now, are these restricted for anything? Nope, doesn't say anything. We know that's unrestricted. And this, it didn't say anything. It's in the general fund, so it's probably not. So we can record it as revenue, investment income. And that's 54. And of course, if you wanted, you can make that 2 transactions, not a problem. Now, here's a slightly trickier one. Refrigeration equipment costing $3, well, $3,000, was purchased with general cash fund. Well, the refrigeration equipment has to end up in which fund? Capital, but we're using general fund cash. So we're essentially going to do two entries. Equipment's going to go in the capital fund. This is going to be capital, and this is going to be general. So we're going to debit equipment for 3. And here, we'll leave the debit for a second, we're going to credit cash for 3. So what we have is two different funds with a debit and a credit crossing it over. So what we need to do is transfer to capital fund for 3 and credit transfer from general for 3. Okay, so that shows cash comes into the capital fund and then it's spent. Here, cash goes out because we bought something for capital. So that's about as tricky as this is going to get. So the year 6 amortization charges amounted to $150, of which 90 pertains to capital assets that were restricted, and 60 is assets that have been purchased with unrestricted funds. So, as you saw at the beginning of the question, all capital assets go into the capital fund. So it all has to be in the capital fund. And then it's just the amortization entry, which you already know. Amortization expense, accumulated amortization for $150. So all capital assets, regardless how you paid for it, go into capital fund. Okay, so those are the transactions. After these journal entries are posted, financial statements can be seen in Exhibit 12.3. So I want you to actually post these entries and do the statements, just the balance sheet and the income to practice, because you need to know how to do that. You're responsible for entries, which are the harder thing. Posting's easy, calculating the balances. Blah, blah, blah. You can read that. Closing entries, just so you know, revenue and expenses of each fund are closed separately to the fund balance, similar to retained earnings or net assets. Oh, sorry, should have moved that up. So, revenue and expenses are closed separately to the fund balance, similar to retained earnings or net assets. Okay, I am going to leave this video or this portion and then start a new one.